Well, good morning, everybody, and welcome back to day 3 of the NWR Small Caps Investor Conference. On the call this morning, we have Gary Foster from Pearl Global Limited. So Pearl Global is a revolutionary tyre processing company that applies unique next-generation thermal desorption technology to cleanly convert tyres into valuable secondary products, including waste-to-energy opportunities. Pearl's got Australia's first environmental approvals for the thermal treatment of rubber, and the company's in commercial production at its facility in southeast Queensland. Pearl's technology is a huge advancement on other methods of processing waste tyres, reasons being it's got low emissions, there are no hazardous byproducts, and it requires no chemical intervention. So Gary is the executive chairman of Pearl. His role is to assist the senior management team in continuing to grow the company's clean conversion technology from the showcase facility in Queensland to a global force in resource recovery. Gary brings a strong entrepreneurial history covering financial services, agriculture, environmental industries. Prior to this, Gary was CEO of an international commodities trading business, and he was the co-founder and is current non-executive chairman of Vortiv Limited, which is an ASX-listed profitable cybersecurity business. So in terms of Q&A on the call, attendees can put questions to us via the Q&A box at the bottom of your screen, and we'll address them at the end of the presentation. And with that, Gary, I'll hand over to you.
Thanks very much, Tim. Just as an introduction to Pearl, we've actually been going for around about 12 years in total. 7 odd years of that was actually in R&D and actually developing the core components of I suppose, the ability to extract desired products from tyres. Previously, we do sometimes get compared to pyrolysis, which we are not. We are thermal desorption. Pyrolysis, hence a very high temperature. We use low temperature, which means that our products that are produced are very usable into domestic markets, as we've already discovered. So we are the first company in Australia to be licensed by the EPA to thermally treat tyres. So we see ourselves as more of an industrial technology company, extracting products that we want from tyres rather than a tyre recycler in itself. Our business is quite simple. It's linear and transparent, and it's modular. So our units are actually built in 40-foot sea container frames, and we actually have great control over our processes because of the size of those units. Modular because we have the ability to be located in any particular area. So as an example, mining tyres in the Pilbara or mining tyres in Queensland, we can actually be close to the location of where the miners are because we are small and portable. Our management and board, certainly we've established a very strong board, and we intend to continue to add to that board. At the moment, there's myself and Andrew Drennan who reside on the board. We're actually looking for a non-executive chairman, which allows myself to be more in the business and sort of having more independence at board level, which is very important to us. One of our cornerstone investors, Rock Partners, $6.5 billion under management, is very supportive of our business. Every time we've obviously raised capital, they have continued to wanting to hold their position. So we have strong cornerstones. We have received a number of government grants from the state government here in Queensland. One is for waste to energy, which we're working on. I'll explain more about that. And another one for actually the recycling of tyres itself. There's obviously our corporate overview, a little bit of information there. As I mentioned, our strategic investors, cornerstone partners there with Rock Partners. We also have Energy Super Fund, which is Queensland based, and Capricorn Cooperative, which is basically a consolidator. They have 18,000 automotive members, and we collect tyres from them, and we're also working with them on some products in relation to our secondary raw materials. So converting our fuels into solvents, which then goes into degreasers, which I'll explain a little bit more in the coming slides. So we've processed over 1 million tyres here at the facility in Queensland. We're in the process now of continuous ramping up. We've started building more units here at Stapleton. They will come online in the following quarters. Our growth in cash receipts, we did actually see quite a jump, as you can see in our last quarter. This has been driven by the change in policy from both the federal government and the state governments in the banning of waste streams to basically not allow export of plastics and tyres, which is scheduled for June 2021. So what we found, I think, from the federal government budget announcement, there was that we had a lot of larger groups coming to us and saying, look, we understand what you're doing, we understand you, but we really need a solution. We don't want to export our tyres. So we have seen quite a large jump in receipts because it's mainly been driven by tyre income, because we receive cash for acquiring those tyres. It's a gate fee. So that's really what's driven the last quarter. We actually have more tyres than we can handle at the moment, hence we're building more machines. And we've just raised capital to actually continue with buying capital equipment to handle those volumes. So where we sit as a company is we have three main focuses. One's environmental, one's economic, and one's social. So we know there's a massive tyre issue globally. We know there's a big issue in Australia. We're addressing that through our process as again, the key to what we do is really the emission profile. So the emissions that we release, which is our waste to energy project, is very high in hydrogen, very high in methane, and high in propane. So they're very clean emissions. Because of those clean emissions, we're actually able to capture those, put them through a generator, and then be less reliant on the electricity grid. Once we've completed that project, which should take us around 3 to 4 months, we actually have a full circle whereby we're not reliant on electricity, we're capturing our own gas, and therefore we're using every part of our process. So we have very strong social outcomes and very conscious of doing the right thing by the environment. But we do know to continue that, we actually need to be profitable. So our model is very straightforward. As I said, we receive a gate fee prior to production. So people drop tyres off, we collect tyres from different groups, whether it's your Bridgestone, whether it's councils. So we have about 5 or 6 councils involved in our collection process. They come in, we actually shred those down into, I suppose, the size of your iPhone type size. Goes through our thermal desorption unit, which is the IP, and then we produce our products. At the moment, we're selling our level 1 products that you see there. So basically, whatever comes straight out of the ovens, if you like, our raw fuels is going into the asphalt industry. Our carbon is also going into asphalt blends, and also looking at bitumen. And we mentioned about the clean gases. The steel basically goes to either a Sims metal type recycler or down to steel mills in Newcastle as an example. Mentioned previously, that's a pretty simple process in that we collect tyres, which is our raw material. We process those tyres, we put them through our thermal desorption unit. The key to the IP is the time, the temperature, and the turbulence that piece of rubber passes through the oven. It's a bit like a cake. If you overcook or undercook a cake, you get a different result. The same with this process. If you overcook or undercook, you actually create exotic gases or toxic gases. So the development over that first 6 or 7 years was actually getting the time, the temperature, and the turbulence just right to produce a clean gas. And that's the key to the success of being able to operate and able to get an EPA license to operate. And then we have obviously our third is our products, our raw materials. So because we heat at low temperature, as I said, it's very important for us to be commercial and be economic. So by heating at lower temperatures, you actually use a lot less energy than if you're heating at higher temperatures, which is a typical process that has gone before us, which is mainly focused on pyrolysis. because we heat at lower temperatures, what we find is that our products that come out are very usable in the market. So our carbon, as an example, is actually 75% pure carbon in itself. So when it's put into the asphalt blends, so there is a difference between asphalt and bitumen, which I'm only learning myself. Asphalt is the dry product, the recipe, if you like. The bitumen is the liquid that actually binds everything together to produce the asphalt. So our carbon is going to asphalt blends. What they're finding, because it is pure carbon, is actually enhancing the asphalt significantly. So it's increasing stability, it's increasing color, it's increasing stiffness. It's obviously a better environmental outcome because they're not using raw materials. So it's quite a significant outcome. The fuels, the fuels are also going to two asphalt manufacturers currently as a burner fuel. So it's replacing diesel, if you like, for the heating process. So the fuel's not being used in asphalt mixes; it's actually being used as energy in their burner fuels as a burner fuel, as I mentioned. Our partnerships. So as I mentioned, we've had Rock Partners as a cornerstone. Very large entity, really want us to run quickly. We I suppose have flown under the radar to this point because we wanted to establish our domestic markets, and obviously, you know, with that comes our ability to expand quicker. So if, for instance, previously we were exporting a lot of our fuels and our carbon, and obviously the cost of that export and those other markets are more limiting than what we are looking at now with our domestic markets into the asphalt and bitumen industry. So the asphalt industry in itself uses 10 million tonnes per annum of virgin products, and there's 120 asphalt plants around Australia. So what that means by us being able to sell our products into this large domestic market is our ability to expand, whether it be regional or whether it be, you know, along the coastlines. Capricorn, obviously I've mentioned Aussie Road Services. They were the first ones to sign up in relation to using our fuels and our carbons. On the 24th of this month, we actually have a marketing day with a new product that they have, which is related to basically an asphalt product, which is being released to a lot of the councils. So quite an exciting opportunity for us to be involved in that product. And of course, we are members of Tyre Stewardship. In relation to our secondary products, which you would have seen on the previous slide, we've already completed a number of initiatives. We've converted our raw fuels into two products, one being an industrial solvent and the second being a fuel oil product. So once we extract, so 100% of our raw fuel, there's 30% of it is actual solvent, which is a limonene, an xylene. In essence, the product that's used for degreasers. So we've taken that one step further. We've completed that. We've actually created a degreaser. It passed all Australian standards. We've put that out into the market for testing. There are some nuances that we need to get over. One is sulfur, which we have addressed successfully, and we're now making alterations to that. The purpose of all of these secondary products is to actually increase the value of our sales price. So at the moment, as an example, with fuel, we're selling at 50 cents a litre, as an example. With our splitting of our industrial solvents, that 50 cents a litre is more like $2 a litre across the average. So all of these initiatives are either for cost saving or to increase sales value. Again, with our clean exhaust gases that I mentioned, so in our process, there is a gas that is released, which is a clean gas. That gas we capture and we basically use for our own electrical energy, which is the clean exhaust gases we talk of there. In relation to our carbon that it was going into the asphalt, we've also created an activated carbon as well. Again, a secondary product, which all of these initiatives are underway, but really won't, I suppose, be effective for about another 6 to 12 months, because there is a secondary process that you need to do from taking our raw product. I mentioned about the asphalt and bitumen industry. This is a very key point of focus for us. We do know that there's great government support for projects and infrastructure. We do know that our asphalt is enhancing, our carbon is enhancing asphalt. We do know that there is a large market out there, and that's what we're going to be targeting next 3 to 6 months, which will certainly enhance our growth. I mentioned the board. Obviously, we have a pretty diverse group. We are looking to ensure that there's more independence on the board, which is obviously always a key focus. So I don't think that would be too far away. Just from a timeline perspective, obviously I mentioned before that we started in 2000, probably a little bit before that, but 2010 on R&D. And obviously there's been quite a development through there. I think we're at a point now where we know what we're producing, we know that there's acceptance in the market for our products, and now it's more about scale and being able to grow. We're selling into a large market, so we're not necessarily looking at niche products here. We're looking at sort of moving volume, and that's certainly doable through the asphalt and bitumen sector. In relation to our highlights, obviously, as mentioned, we are in a large addressable market. We have been successful in relation to our missions. We've been operating here for 3 years, which started out as obviously, small scale testing, getting EPA approvals, where we need to provide independent testing every 6 months. We actually get independent testing every 3 months, which is building a bank of data. So as we move into other sites, other locations, whether it be in Queensland or outside from a national perspective, we already have a great volume of data above and beyond what's required by the regulators. So we're finding that our products, we're providing real solutions. So these are not just like, well, it's just a recycled product. We're actually enhancing the products that are being made, which is quite unique from a recycled perspective. And that's probably a good summary. Probably happy to open it up to the floor for questions. Over to you, Tim.
Thanks very much, Gary. Nice presentation. Yeah, just a reminder to all attendees, any questions that you've got for Gary, just submit them through the Q&A box at the bottom of your screen and we'll address them that way. First question's come in, Gary. What sort of sustainable margin do you believe that you can achieve, and in what sort of time frame?
Sustainable margin. So if we're looking just on sort of broad numbers, the site that we're currently on has the ability to process about 20,000 tonnes per annum in essence. We would be looking at somewhere between a 4 to 5 million EBITDA number on what we're currently on our current sales price. I would expect that sales price will increase, and the reason why, I'm sure everyone says that, but the reason why I say that is because as we progress down this track, a lot of these products are very new to the market, and we're finding that they have more value than what we've actually made a sale price on. So, example, we actually sell our char at the moment for $20 a tonne. What we've discovered in the last sort of 4 to 5 weeks is that because of the ability of our char or our carbon to enhance the asphalt product, it's replacing the ability of lime. So lime sells for $350 a tonne. So now we have that data. As we make more sales, we'll be able to increase that sales price. So hopefully that gives you a bit of a flavour and indication. Yep,
that makes sense. Thanks, Gary. Given the modular nature of the process, is the business scalable? And a follow-up question there is, what sort of return on equity could you achieve given the need to build more ovens to increase your output?
Yeah, I think the ability to expand has been significantly enhanced in the last 3 to 4 months with the development of the asphalt and bitumen industry. So as an example, Aussie Road Services, which is part of the C Civil Group in Queensland, very large group, they are building 5 asphalt plants in Queensland. They've asked us to co-locate with them in all of those 5 units. Purpose being is that they know they can use the fuel, they know that they can use the carbon, And they also know that on the completion of our waste to energy project, they'll be able to utilise that because we'd be co-located, if you like. We've already had demand from the Pilbara in Western Australia, where there's a big issue with mining tyres. So I think, you know, our ability to expand was restricted previously if we were just selling to an overseas market, into a fuel market, but now that we're into this asphalt market, as I said, 120 asphalt plants in Australia, our ability to expand is up to us, and it's up to available capital. So if we're talking about capital, how do we continue to fund without sort of dilution? Because we're receiving income at the front end of the tyres, and because we now have strong offtakes, very financeable in relation to the building of units. Each site will cost around about $20 million. And as I said, we've got a rough return on equity there if we're looking around a 4 to 5 million EBITDA indication.
Yeah, no, it is a great feature. It is a great feature that you get paid up front to take the material. So that's excellent. Just moving to, I guess, sort of the immediate term. The question that's come in is, why was there a drop in Q4 2020 cash receipts? Was it COVID related? And do you expect Q-on-Q growth in cash receipts going forward?
Yes, it was part of that. I think as we develop, we're going to have some lumpiness. So there will be a little bit of, you know, fluctuation in those customer receipts. And that's as we strike a balance between the number of tyres coming in, our volumes going out, and sales. So you know, in all honesty, I think there will be a little bit of that lumpiness, but there will be a continuous upward trend because the demand is significantly is there, where we're turning it away. It's up to us to really get that balance right. So there will be some lumpiness in the next couple of quarters, in my view. Thanks, Gary.
And is your technology portfolio sort of set and how you would like to see it now, or is that the sort of thing that you can see yourself wanting to augment, whether it be through your internal R&D or potential M&A at some stage?
Our process is set, so the efficiency and the design of the oven itself has been tried, tested. If we build bigger units, or so instead of building, say, 4 or 5 units on this particular site, if we just build one large unit, it's very hard to control the emissions within that massive oven. But if you build modular, smaller units, it makes it a lot easier. So it's very important that we keep that emission profile that's set. So that's been operating fine. There will always be improvements in relation to the handling of product. So when it comes out, you know, the carbon and the char, how we handle that, there's better systems to do that. That's always been a restriction of capital. But as we obviously build, you know, our more sales and greater receipts, we have the ability to make alterations to that. But the oven and the process and the IP itself is fixed. It's done.
Thanks, Gary. And can you talk about the time frame for potential profitability?
Always a hard question. We do have our own target. We expect that everything being equal, what we know as of today, that we, by the end of this financial year, we expect to be close to a break-even point.
Sounds good, Gary. So that concludes all the questions that we've had for the session today. So with that, Gary, I'll pass back to you for any parting remarks.
Don't really have one. The first time I've done one of these, it's quite unique, where you don't have much interaction with the audience, but I suppose that's the new world, right? I'd like to thank you all for your time. As I said, we are a developing, emerging growth company. We're doing all we can, obviously, to increase shareholder value. And I hope you enjoy your weekend.
Excellent, Gary. You too. Thanks for your time, and thanks to all attendees for listening in, and we'll catch you next time.
Thank you.